All right, welcome back. We're here at session 5. We're in the home stretch now. Today we'll be covering financial management and fundraising. And we have a special guest with us today as well that we'll introduce to you shortly. Wanted to everyone go ahead and update your handle, your Zoom handle, like you always do, with your name and your organization and your pronouns if you have a preference. We do like to see faces, so it's nice when you're able to show us video, so we know that you're with us. We spend some time here in the gallery, as you know, so it's nice to see faces as much as we can. And I think we'll move on to the next slide. And I will pass it off to you, Dr. Palmer.
Good morning. Hope everyone is doing well and that we are ready to get started and get going. If you would, Rebecca, go to slide 6 with today's agenda, and Lisa is gonna open us up, and we'll come back to that slide.
Great. So thank you, Dr. Palmer. So just to quickly take you through this, I know you can read, so I'm not going to go through each bullet out loud, but just so you can see again, we have 2 topics to cover today. So it's going to be pretty jam-packed. So we'll move you along wonderfully as usual, and taking planned breaks, well, unplanned, but planned breaks in between as we need them. Any questions, please let us know. But again, as you can see, we have 2 financial management and fundraising to go through today. And some of the information will be very much in detail. So again, if you have questions as we go through, please make sure you ask. Next slide.
Good morning. As I said before, thank you so much for being with us today. If we could go to the gallery, and then if we could pull up the strategic planning slide with all of the items listed when we go back. It's good to see everybody. Just want to do just a real quick check-in. If you would, just kind of use your reaction and kind of give me an idea of where you are this morning. Some of you have probably answered a million phone calls and emails already, and it's not even 10 o'clock yet. I have Chris commented when he checked in this morning that he was on his 2nd cup of coffee, and so am I. So we're off to a really, really good start here. I see sunglasses and smiling faces and thumbs up, and don't know quite where you are. Might be kind of where you are this morning, but again, it's good to see you, and the team and I are looking forward to sharing with you today. Our topics, as Lisa mentioned, is on fundraising and financial management. And we're going to begin that part of our work. We're going to begin with the financial management for today's lesson. But before we go into that, I just want to get a sense of where we are with strategic planning. So go back to your workbook, go back to your notes. I'm just going to give you a minute or two. Go back to the information that we covered. When we cover the strategic planning topic, there is quite a bit of information. Well, there's a lot of information in the entire institute. And quite often what you'll find is that we will share with you some information that may or may not be in your workbook. We may also share information that we kind of add as we are working with you and hearing your questions and so on and so forth. So just be mindful of that, and I'm sure by now you've picked up on that. But again, before we move into our new information today, which, am I right, this is our next to last session. So we only have one more session after today. But if you would just kind of take a minute to look back at our list of the work that we did last week. And I just want to get a sense of, what is it that you're very clear about is where I want to start. And then I want to find out, what are you not so clear about in this lineup? So we want to take time to reflect on that before we move into our new information. So give me a sense of what you are very clear about when you look at this list. And you can unmute yourself, or you can put the item in the chat. And then team, if you could kind of help me out there. What are you clear about or not clear about? This is where I'm at now. What are you very, very clear about? That you understand it, you get it.
A couple of people said they're clear on everything, just need to work on it.
Mm-hmm.
Hardest part is starting.
Okay. Anybody else? What are you not clear about? Is there anything that is listed here that you kind of go, I still kind of don't know what that is? Go back to that slide, team. Yeah, right there. Mm-hmm. Is there anything listed here that you're not clear about? You kind of say to yourself, don't really know what that is.
The work plan versus, oops, wait a minute. Here we go.
All right, we'll take one at a time.
The work plan versus writing the plan.
So oftentimes what happens with the strategic plan is your overarching direction or roadmap. And work plans are typically developed in alignment with what those specific goal areas are. So we had two folks who shared two examples of strategic plans with us last week. And each of those plans, if I recall, had 4 primary goal areas. Each of those goal areas could have a work plan to go along with it. And oftentimes as well, when you look at in the plan, when you look at who is assigned to a objective or a strategy or an action step, sometimes work plans are developed out of those. And in our workbook, there's if you go to page, and I asked you to modify that too last week, because that was a little bit misleading. But if you look at page 96 and 97, on page 96, you see work plan example. But this is a format for the goal and action steps. And a work plan could be developed from this. So if you could make that edit in your book. And then on page 97, you'll see the worksheet. And so this is the worksheet to complete the goals, the action steps, and the outcomes. And we could develop a work plan in alignment with this. And a work plan has more detail on what actions you're going to take and who's assigned to complete those actions. Is that helpful? And I think we have some more questions.
Some people thought the example was helpful. Can you explain the difference between mission and vision?
So in terms of thinking about the mission and the vision, the mission typically gives us some insight as to what it is that you are intending to do right now on a day-to-day basis. So it kind of gives us that verbiage that tells us what our nonprofit is doing currently. And it also gives an indication of what the purpose of the nonprofit is. The vision gives us some degree of insight as to what you are working towards as an organization. So I oftentimes like to think of the mission as the purpose, and the vision is what it is that we want to see as a result of pursuing that purpose. Is that helpful? Okay, are there any other questions in the?
We're asking if Forsyth County Smart Start can share their work plan again, their strategic plan again. Melissa is asking if they wouldn't mind sharing it. The document.
Okay. Did she share, did we put something in the chat for that last week or no? For some reason, I thought we did.
I think both of them were shared in the chat, but we'll
Okay.
go back.
Okay, great. Are there any more questions?
Anything else? Nope.
So if we could go back to, actually go ahead and go to the next slide. So just in the next one. Yeah. So in terms of just kind of thinking about I want to go to the review and reflection of session 4 slide. There we go. So in terms of just thinking about strategic planning, we did send out information in the wraparound. Rebecca, do you want to remind them of what was in the wraparound, just so that everybody knows where to go and get that information?
Sure. Yeah, so in the wraparound, you will have a link to our extranet, and we store in there any of the files that we shared during the chat or during the session in the chat. Anything that we may have showed you that folks said they wanted a copy of, that'll be in there, in addition to the slides from last week. And then in that wraparound email, you'll also have a link if you need to listen to the recording, if you had a part that you missed, or you want to go back and review, that was in there as well. And I think that was it. We try to refrain from having a lot of attachments with that file because it comes from Salesforce. And sometimes your email will kick that out, sees it as spam, for instance. And then also Salesforce only allows us to store those files for so long. So if you went back to that email and tried to access things via anything we've attached to that email, you won't be able to get to it. So we've since just put things on our extranet, and then we know it's there for you.
Okay. All right, thank you, Rebecca. But I do want to point out just a couple of things that is in the that we covered last week. There were two things that we shared. One was related to the SWOT analysis. And you have in your workbook a worksheet that it has 4 square boxes. And in there, we have places for you to kind of note what the strengths, weaknesses, opportunities, and threats are in alignment with your goal, action steps, and outcomes. So we gave you 2 examples of a completed kind of look at what it looks like when you write your goal, you craft your action steps, and you write your outcome statement. And so we gave you an example of a program goal, which would be more like one of your programs or services that you're offering. And we also provided you with a nonprofit goal. So more or less a capacity building goal or an example of one that you might see in your strategic plan. Another thing I'd like to mention about the strategic plan is that when we are writing the plan and we're determining what the primary areas of our work are going to be in that plan, i.e. the goals, oftentimes it comes in the form of organizational goals and then goals that are specifically related to the impact that we want to make as a result of our mission, in terms of what our mission and vision is, but also in alignment with our programming and our services. And so we encourage looking at your capacity as a part of the assessment process and contextualizing the climate in which you're trying to write this plan and what your organization might be experiencing as a result of putting the plan together, but then trying to implement the plan. The example of the program goal and the example of the nonprofit goal was provided for you in the chat. So just kind of keep that in mind, that was that's how we shared that information. We can go to the next slide. Go to strategic planning goal setting. Thank you. So just again, just as a recap of where we were and what we focused on last week related to strategic planning. The heart of the strategic plan is where we see what it is that we're going to do over the next 1, 2, 3 years. What action steps or strategies or objectives are we going to implement in order to accomplish that goal? And then the outcome in terms of outcome achievement, in terms of the impact that we want to make as it relates to that goal. So these three pieces of the strategic plan we group those together. And if you notice in the example, we provided you a singular sheet of the program goal and the nonprofit goal so that you could see kind of how those look as it relates to pulling that all together. The other thing to keep in mind about our work, the work that we did related to strategic planning, just to kind of emphasize, the idea here is for you to have an understanding of what strategic planning is, how we do strategic planning, and understanding how to put all of that together. Not necessarily for you to become a strategic planner, but specifically for us to know exactly what it's going to take for our nonprofit to work through this process and what those different parts of the process are. So, but again, think about this as well. When you're looking at that list in terms of the process, the time that it takes to complete the context part, which is the needs assessment, the asset mapping, the capacity assessment, takes quite a bit of time of the process. So when you're planning, know that a significant amount of your time is spent there, because that's where you get the feedback from your stakeholder groups. And then also what you see on the screen here. This is a part of the process that takes quite a bit of time as well. Crafting the goals, coming up with the action steps, and writing the outcomes. And oftentimes this takes place with staff and board. Sometimes there's a staff retreat, sometimes there's a board retreat, sometimes there's a combination. It just depends on how you map out your process. But again, the goal with the strategic planning session is to inform us and to help us to understand what those steps are, and get some insight on how those steps are implemented, so that when the time comes for you to determine how you want to go about doing strategic planning, you have that understanding. So just want to touch on that a little bit as it relates to that. If we could go back to gallery. Thank you. And again, if we could if you could kind of give us an idea if you have any questions or if there is anything that maybe we have missed in terms of just a reflection. We know that that's quite a bit of information, and we just want to take the time to give you the opportunity to pose any questions you might have. Okay, our topic today, we have two topics today, and both of those topics are financial management and fundraising. And so, team, if we could go back to our agenda slide. I think that's slide 6. Thank you. So here's what our work involves today. It is in two parts, financial management and fundraising. As it relates to financial management, we're going to focus on financial transactions, internal controls and audit, diversification of revenue. And so we're going to be going on what we consider to be some salient parts of how we should be thinking about and doing financial management in our organization. And we also have a guest speaker with us today. We're gonna tag team and facilitate parts of the financial management session together. And then the second part of our topic for today is fundraising. So in this particular part of our work, we're gonna focus on the stages of fundraising, which are identified as identification, cultivation, solicitation, and stewardship. We're going to spend some time talking about communicating with our donors, understanding different fundraising programs, looking at some fund development strategies, and then also taking some time to discuss the human resources that are necessary for fund development. And so we're going to work through these pieces of information. And once we complete that, then that will conclude our session for today. But at any rate, we're going to go ahead and get started on our new information. If we could go to, I think it's going to be slide. There we go. Thank you. Go to slide 12, I think. Thank you. So where we want to start this morning, here is a visual that we want you to take some time to look at. And we're going to go into breakouts. And going into our breakout sessions, please take the time to introduce yourselves. And also, our focus is going to be this question. This is the question we want you to discuss. How does this image represent a nonprofit with a diversified revenue stream? How does this image represent a nonprofit with a diversified revenue stream? So that is our question going into our breakout sessions. And Rebecca, I'm going to turn it over to you.
Great. So we've set up the breakout rooms here. We'll go ahead and open those up. Let me add 10 minutes here. I don't know why it defaults to 30 minutes. That would be a really long breakout. So we've got you all here. We'll be putting this link in the chat here so you can access this pie chart on page 3 of this impact report from YWCA. And then I'll add into the breakout chat just what we're asking you all to do.
And also,
go ahead.
Also, Rebecca, you all can also take a quick picture of the screen too. That's all. That's a quick way to get to be able to see this while you're in your breakout. Sorry, go ahead.
No, that's fine. That's fine. And I'm making sure that I get all of our folks that are not supposed to be in one of the rooms. There we go. All right, I'll open up the rooms and we'll see you back here in 10 minutes.
We can go back to gallery view too. Thank you. We are focusing on financial management and fundraising. And so when we sent you to the breakout rooms, we asked that you have a conversation around this question. How does the image that we share with you, the pie chart of the YWCA of High Point, and you can find this on their website, by the way. How does this image represent a nonprofit with a diversified revenue stream? So if you could just kind of give us an idea of what were some of the things that you all talked about in terms of diversifying the revenue stream. And you can unmute yourselves or you can put it in the chat.
Well, we talked about how I think really only one of us kind of had everything in those areas, but a lot of us were focused mostly in one area. And I know for me, I was stating that most of mine is private donors, and I may have a couple of corporate sponsors, but majority of my funding so far has been private donors. And then we just kind of shared our learnings and the things that are going on in our organizations, and there was some great information from folks in our group to be able to help those that are new into this space. And so I also learned about how I can get a better platform for my donations. So that's just kind of what we discussed.
Thank you for sharing, Christina. Any other group that would like to share? It's all voluntary, so you don't have to. And thinking about money related to the work that we do, we highly encourage strategizing, your strategizing related to fundraising and financial management be done hand in hand. Oftentimes what we see is that we have fundraising happening over here, financial management happening over here, and they're not communicating, those two entities are not sharing, et cetera, et cetera. So if I could kind of begin there with, it is important for those two management functions to be working together, so that finance understands the essence of what's happening in fundraising, and in particular, fund development as it relates to grants and contracts. And so when our financial managers are helping us with the bookkeeping and record keeping and budgeting, et cetera, it's important for them to understand those grants and those contracts so that they have a really good understanding of how to help us strategize as it relates to diversifying our revenue stream. And you may ask the question, well, why did we start here? You know, why did we start by looking at this pie chart of financials with a nonprofit? Because that's where we want to land. That's where we as nonprofits, that's what we want to achieve. We want to achieve a diversification of revenue. And while many of our nonprofits may have 99% of their funding coming from grants, that's not altogether a negative, but it is risky because we have the option to fundraise. And so it's important for us to kind of have this diversification of revenue so that we can kind of develop a way forward that is sustainable in terms of, if one of those grants go away, what would we do? If one of those contracts go away, what would we do? Individual donations, unrestricted dollars, that is a goal that we should all strive for. because that is those dollars, we're going to be able to do with those dollars what it is that we deem necessary for our agency. And then the other part to think about, in particular with grants and contracts, is the reimbursement approach. Oftentimes those resources require you to have a significant amount of cash flow, which could be problematic and very, very challenging for many of our nonprofit agencies. So we start our conversation and our work today related to financial management and fundraising with, let's look at what a diversification of revenue might look like. And we're going to come back to this image later on in our talk today. But if you look at this pie chart and you look at kind of where these dollars are coming from, there's about 7 or 8 different revenue streams here. It appears when you look at the pie chart, but if you look closer, you're going to see there's an overlap with some of these areas as it relates to those dollars coming from grant funding. So we want to make sure that we're studying our own organizations and working towards some strategizing around diversification of revenue. So we're going to move into financial management. Thank you, Christina, for sharing. We're going to move into financial management, and team, we can go to slide 17. And Lisa, I am going to turn it over to you.
Great, thank you. Really short. I'd like to introduce Tracy Carriette. She's responsible for the overall financial operations at the center for over 20 years. And she's a woman who wears all the hats. She handles the audit, tax functions, budgeting, policies and procedures, and human resources. I don't know how she does it on a day-to-day basis, but she's our Wonder Woman. And today she'll be your Superwoman as she gives you all of the knowledge that she has. So we'll also put Tracy's additional information in her bio in the chat so you can read it at your leisure. But she has a lot of good information, and Tracy, I'll turn it over to you.
Thanks, Lisa. Good morning, everyone. I'm happy to be here with you all today. I love the addition of the music to try and get us sort of pumped up to talk about financial management and fundraising. And like your other sessions, we have a lot of information to go through, and it'll be pretty high level. But I'm excited to share with you all. And actually, I think that Dr. Palmer, as I already mentioned, we're going to tag team a little bit. So I'm going to let you sort of kick us off, Dr. Palmer, and then I'll chime in here and there.
All right, thank you. So in terms of thinking about financial management, as we mentioned on the agenda, we're going to focus on 3 kind of primary areas: financial transactions, internal controls and audit, and diversification of revenue. And we kind of started with the diversification of revenue as we were looking at the image or the pie chart with a nonprofit agency. And so I just want to point out in your workbook on pages 102, 103, you have a sample budget worksheet. We're going to use that. But more importantly, on page 103, and this is also going to be put in the chat for you as a link, because we are going to be opening these files, opening these documents to kind of walk you through developing a deeper understanding of specifically the duties and responsibilities that are related to engaging in managing our finances as it relates to transactions. And as I mentioned before, with internal controls and audit and diversification of revenue. So I just want to point that out. And go ahead and look in the chat and go to that link. And want to make sure that that's working for everyone before we get going. Everybody good? I'm gonna take that as a yes. All right. As I mentioned before, we're gonna populate this on the screen, this information, but you also have the link there so that you can get to each of these documents as we get to them. You can go ahead to the next slide. So in terms of just thinking about guidelines and policies, think about each of our nonprofit organizations is set up differently. Some of you are fortunate enough to have staff that's dedicated to just managing the finances. But as Lisa described when she introduced Tracy, Tracy does financial management, she does human resources. And so her role and her function is not just about managing the finances. And that happens a lot in many of our nonprofits. Some of you may very well have a bookkeeper only. You may not have a CPA on your staff, or you may not have a financial manager that may be outsourced even to an accounting firm. And so depending upon what that structure is going to have a lot to do with the guidelines that your staff, volunteers follow, and or policies that you follow. Another place that you want to look for some insight on managing finances is in your bylaws. And you may very well see information located there as it relates to that, specifically related to like your finance committee, your treasurer of your board, etc. So those individuals, if you're fortunate enough to have people in place for that, they're going to be also assisting and helping with kind of making sure that you're following whatever protocol there is as it relates to the finances. In terms of having some internal controls, many of your organizations may very well have like a financial management manual, or you may have a guide that gives folks instructions on how things are handled. And then you may also just have some overarching practices that you engage in or that you utilize just to kind of keep your finances in order. And so in terms of thinking about guidelines and policies, again, check your bylaws, see if there's anything related there. Inquire with your agency to see if there are even any notes or, any kind of document that gives some instructions on how do you deposit a check, or who signs off on the checks, or, any of those kinds of things. I would encourage us, if we don't have that in writing, that we put that in writing. And then in terms of, I don't know, Tracy, if you have any comments about guidelines and policies before we get into financial transactions.
Yeah, actually, I think you're hitting on all the important notes there, Dr. Palmer, and just that they will look different for every organization, depending on how you're set up, even the types of grants that you receive. And so looking in those places that Dr. Palmer mentioned, and if you're sort of following some processes internally, but you don't have them in writing to document those.
In terms of duties and responsibilities, so as it relates to managing our finances, we are responsible for establishing a budget. And we are also responsible for keeping up with and identifying what our revenues are coming in and what our expenses are. So there should be a way in which you are housing that type of information. And there should be a budgeting process that you are following. Typically, the budgeting process or the budget is approved when you're at the end of one fiscal year going into the next fiscal year. So some organizations, your fiscal year might begin June 1st, some begin, July 1st. Some are on a calendar year, January to December. So you should be doing your budgeting in alignment with that. And it is a very good practice that your board is reviewing the budget and approving the budget. So that's important to keep in mind. Tracy?
Yeah, and nothing really to add there. And I think when we pull up some of the sample budget documents, we'll talk about more of that in a little bit detail. So a little bit more detail. So I'll hang on to any additional thoughts then until we get there.
Okay. If you look in your workbook on page 103, and we're gonna go into detail with this a little bit further down. But go ahead and mark page 103 because 102, we're gonna come back to that. That is an actual budget worksheet. I'm turning to my left here because I got my workbook over to my left. So the budget worksheet is there. Go ahead and kind of get that ready so that you'll be ready to use that. And go ahead and go to the link that we sent and open up the sample. And what we have for you is we have an organization. We've pulled the financial documents and we want to just kind of go through what we consider to be the primary reports that typically are shared with boards as it relates to our board meetings, but also in terms of staff. So go ahead and open that link up. I'm gonna let the team open that up, the document here, and then we're gonna just walk you through what a statement of financial position is, what a statement of activities is, cash flows, and functional expenses. So we're gonna get that teed up here on the screen so that you can see this. And there's a question in the chat.
Can you share a best practice template for nonprofit financial procedures? Can you share a best practice template for nonprofit financial procedures?
Yeah,
Tracy, any thoughts?
Yeah, I think that what we can do, I don't have one handy that I can drop in the chat right now, but what I can do as part of a follow-up is work with the team to look on our website and Information Central and see what sort of templates we have in there that you all might be able to use to help you get started in drafting some procedures or a manual of sorts. So absolutely.
So we're going to start with, we're going to open up the document, the titled financial statements. And I'm going to just hold off, Tracy, until we get that on the screen.
Sure.
And then I'm going to let you walk through it. So for those of you, is there anyone that is not able to open the document? Okay. Okay. Tracy, I'm going to pass it over to you and the team is going to scroll through the docs.
Okay, so what you have on the screen is an example of an audited financial statements from an actual organization. This is Big Brothers Big Sisters of Massachusetts Bay. These are the types of financials that you typically find on a nonprofit's website. So all we did for a sample was just go and grab one that we could use to walk through some real life statements for the organization. Dr. Palmer already mentioned this, but just to reiterate and sort of start off our conversation, as staff, you're going to be wanting to prepare or receive similar statements on a regular basis from the nonprofit for reporting to the board and monitoring internally. They won't look exactly like this because, again, these are audited financial statements, which means a third-party CPA firm has come in and done the required testing of financial transactions over the course of an organization's fiscal year. But this gives you an idea of what they would look like, and certainly what it would look like in an audit. And so, Leslie, you can scroll down and keep going. I think we're going to start off with the statement of financial position. So that's just the standard letter. Yeah, right here. So this first report that we're going to look at, this is the top part of the report, which talks about the assets of an organization. The statement of financial position is often referred to as the balance sheet. You may have heard it referred to that way. What this shows is assets, which is what you own, liabilities, which is what you owe, and then the net assets or the equity. You'll see this report arranged in order of liquidity, which is just talking about for liabilities, for example, when something is due versus current or long-term. And we'll look at that in a second. This report is going to provide you a snapshot of the financial health of the organization. Some examples of assets that you see on this report is cash and cash equivalents, which is your bank accounts where you hold your funds for the organization. Grants receivable, those are awards that are owed or expected to the organization when you've gotten notification from a funder that you're getting a grant. They would show up there. Prepaid expenses are things you often see on this statement as well. An example of that is health insurance premiums, for example. So if your organization is paying health insurance premiums for its employees, you might see that shown up as a prepaid expense because it's something that you're paying in advance. And oftentimes in the example of health insurance, you're paying those premiums 1 month ahead of time. So when you get to the end of the fiscal year, you're looking for things that you've already paid in advance of when they're actually due. And that would be prepaid expenses. Also property and equipment, if you own any building, land, equipment of a certain value, those types of items would show up here under assets. And then you might have other assets. A security deposit could be an example of if you lease office space and you had to give a deposit up front. That's something that would show up on as an asset to your organization. Leslie, if you'll scroll down the bottom part of this report or the second page of it,
And
talks about.
Tracy,
Yep.
Could you talk a little bit about how this report can be generated at any point in time for the agency? And could you talk a little bit about the platform that you all use for like QuickBooks or whatever platform, because it generates these reports? Mm-hmm.
Absolutely. So I know that not all nonprofits have some sort of sophisticated accounting system to keep their records. If you do, it can be a range all over the place in terms of what your organization is using. The center uses QuickBooks, and I know a lot of nonprofits do as well because it's inexpensive and it's pretty user-friendly. And these are reports, as Dr. Palmer mentioned, that your accounting system can create for you at any point in time. You can look at it over a monthly basis, a quarterly basis, a biannual basis, or an annual basis. And so if you utilize the tool of your accounting system, then you can get them to create these reports so that you are monitoring them at a point in time. The balance sheet is a report that the center creates quarterly for our finance committee as one of the pieces that they look at, and the other ones are some of the other reports that we're going to walk through. Just helps give us an idea of our financial position and helps us monitor as we've been discussing. So yes, if you have something like QuickBooks, this is a report that your finance folks, if you have them, or your bookkeepers should be looking at regularly, and that you should be generating maybe monthly or quarterly, whatever makes the most sense for your organization. So looking at the other part of the statement of financial position, this is where you see the assets the net assets and the liabilities. As I said, liabilities are things that you owe. So some examples here on this report are accounts payables. Oftentimes, that's something that you look at year end. So it's anything that has a bill date of June 30, for example, but the actual check wasn't written until July 5th. You'd have those types of bills entered into an accounts payables. You'll also see things like lease obligations. So if your organization leases a copier, or if it's your office space, you'll see the information about those detailed here in a liability. Deferred revenue, that may be unusual for some organizations. It's not for this. For Big Brothers and Big Sisters of Massachusetts Bay, it's also something that the center has. An example of that, deferred revenue is essentially any money that's collected for a service that's going to happen in the future. So just to try and give a real life example here, if you are familiar with the center statewide conference, we opened, if we open registration prior to our fiscal year ending, for example, prior to June 30, but the conference doesn't happen until the fall, then any revenue that we've collected for that conference would be deferred into the next fiscal year, because that's when the conference is actually taking place. So there may be various instances of deferred revenue for your organization. That's just an example. You'll see current or long-term liabilities. Those can be things such as a loan. If any of you received PPP loans or applied for PPP loans during COVID, that's an example of a loan that would show up on your balance sheet under liabilities in terms of something that would be owed by the organization unless it was forgiven by the Small Business Association. So again, just a real life example there. The bottom part of this report, net assets. So net assets are what is left if you sold all your assets and you paid all your debts or liabilities. So net assets equals your total assets minus your total liabilities. And then oftentimes you'll see net assets split into two categories, without donor restrictions and with donor restrictions. And that is related to if you get federal funding or state funding, or if you get a grant where there is a restriction on how you use those funds, that would be donor restricted. And so that would show up in the with donor restrictions line. Without donor restrictions is that unrestricted revenue that Dr. Palmer was mentioning earlier, that is key to organizations because there's no restrictions on it. It allows you to use it as you see fit for your organization. The other thing I'll say about this report is that it defines the net assets that you have available to conduct operations within the organization. And some things that you want to look out for as you read over this report for your organization is you want to pay attention to the receivables, so the amount of money that's outside your organization and that is owed to you. And when those come due, they can be key in thinking about cash flow for your organization. You want to look at the comparison of assets to liabilities. And you want to look for any big changes from year to year to just sort of better understand what's happening from one year to the next. I'll just pause there for a moment before we go on to the next one, in case there's any burning questions or in case Dr. Palmer has anything that she'd like to add. And if not, we can scroll on to the next statement.
Okay.
All right. So this next statement that we're looking at is called the statement of activities. You may hear this referred to as a profit and loss or an income statement. This is another statement that can easily be pulled out of your accounting system, looking again at a period of a month in time, a quarter, or over the full year of the fiscal year. The purpose of this statement of activities is to provide detailed information about the organization's transactions and how those activities help further the organization's mission through initiatives and programs. So this shows revenue and expense over time. It's going to show you cash coming in and going out. And it's going to categorize the revenue and expense in different ways, as you can see here. Your revenue items in general are going to tie back to your budget. You can see that we've got listed here line items like individual donations, corporations and foundations, and other grants. And this organization happens to have an endowment. And then on the expense section, that also ties to the budget, but the way that they're looking at it here, they're broken down by program or support service area. So it's looking at what amount of expenses is used to cover the programs of the organization, and what expenses are used to cover sort of the general admin or the fundraising and development. And we're going to talk about those when we look at the functional expense, but I just wanted to note that. Again, the columns, you'll see that these revenues are separated into without donor restrictions and with donor restrictions. And we talked a little bit about what restricted revenue means, and that it's for a specific purpose or program. And this just allows you to see the flexibility in the funding, because it's largely around those grants and contributions that are coming in that's available. Down at the bottom, again, it's going to reference your net assets, and the changes in those net assets are going to be your expenses subtracted from your revenue. So essentially, this is showing you if you have enough revenue to cover your expenses for the year. Any questions about what you all are seeing here or what I've shared so far in terms of explaining this statement? All right. Well, let's move on. I think the next statement that we should be looking at is statement of functional expense. So I referenced this when we were talking about program service versus support service or administrative and fundraising development. So that's what the statement of functional expense does. It's showing the classification of expenses by function or by program area. So you can see here the first column is program services, and you've got line items that tie back to your budget. So what this is showing is what portion of these line items expenses were directly related to putting on programs and services of the organization. Then the other categories that you typically see are the general and administrative and the fundraising and development categories. The program services include expenses incurred to meet the mission of the organization through program services directly or indirectly. And what I mean by that is you will have some expenses that are very clearly directly related to putting on a particular program. The indirect portion is that you may have some expenses for your organization that serve all areas of your organization. And so those expenses can be spread across your programs and spread across your supporting services. Again, support services that you see here include the general and administrative. They're often referred to as operating expenses or overhead, and then any fundraising and development expenses that the organization has over the course of the year. When we talk about these indirect expenses that can be spread across programs, there are different, and this can be a whole nother session, you all. So it's going to be very high level. But I just want to mention there are different methods to allocate expenses. You just want to pick a method that is reasonable for your organization. It could be based on a percentage of staff time. So when you look at your overall staff and how they're spending their time for various programs and administrative and fundraising tasks, you can create a percentage, and you can spread some expenses across those categories. The functional expense statement, again, is a statement that is often included in the Form 990 for many organizations if they're filling out the standard Form 990. So a lot of organizations do include it in their audited financial statements, and it's something that their auditor reviews during that audit process. There was a question I think I saw pop up about the column on direct benefit to donors. The center doesn't actually have a column where we're sort of pulling that out. So an example of where this could be different, without knowing a lot more about Big Brothers Big Sisters of Massachusetts Bay, I'm not sure I can speak exactly to what they're splitting out here, but I'm trying to look at their category areas to see if that can give me any insight into that. And Dr. Palmer, feel free to jump in here.
It could be, there are times, especially with some of the larger organizations, where they do events and they have specific initiatives that are specifically related to donors as a part of their fundraising strategy. And so when I see here, and of course we can't speak for this agency, but when I see that there is a payroll cost there's food, beverage, and entertainment, it looks like these are in alignment with events that are related to bringing donors together in some form. I can see rent and facility, and I don't think there's any other expenses there. So that kind of leads me to believe that this aligns with some element of their fundraising strategy that involves maybe philanthropists, donors, etc.
Yeah, I think that makes sense. Maybe they have some large gala or something like that where they're bringing that together and they're just identifying the expenses related to that here on their statement of functional expense. Any other questions about this report?
There's another thought I was having too about that, you know, some donors are, they want to be anonymous, they don't want to be acknowledged, you know, they just want to give their gift and they're good with that. But there are some donors who want a lot more than that. And so there may be some expense involved in that. And so they're not receiving any dollars from the nonprofit outright, but there may be some cost associated with meeting whatever expectations is that they've shared with you, that they would like to see happen. So
Yeah, thanks, Dr. Palmer. Leslie, I think you can scroll to our next statement. This is actually just the comparison. So a lot of times in audits, you'll see a year-over-year comparison. So this is the same functional expense statement. It's just from 2018 versus 2019, which is the one that we were looking at before. So excuse me, it's just for comparative purposes. I think you can keep scrolling for me, Leslie. Thank you. So the next statement is the statement of cash flows. This is another report that you can pull out of your accounting system. Excuse me. Again, without going into too much detail and not having a sample here to share with you, there's other ways that you can kind of monitor the cash flow of what's sort of coming in and going out, especially if you want to look at your operating funds and the amounts that's in your bank account to cover expenses over the course of the year. But this statement of cash flow, which would appear in an audited audited financial statement, provides data regarding all the cash flows received from operations and investments. It is summarizing the movements of cash that's coming in and going out. So that's where the money is coming from and how it's spent. We were just talking about with the functional expense, you can see there are year-over-year comparisons on this report. And then it's broken down into those sections I just mentioned. So it's cash flow for operating activities, investing activities, and financing activities. When you look at the operating activities, those are going to be things like cash from operating programs and services. Investment activities are going to be purchases and sales of assets and loans that are made or received. And then the financing activity section is going to include how cash is moved related to financing leases, credit cards, those sorts of activities. And then at the bottom, you'll be able to see the change in cash over the year. And let's see, I think that was everything I wanted to point out about this statement. Again, I'll pause in case there are any other questions. One other thing I'll point out, you can see here that this organization has some investments where they're recording some unrealized and realized gains on investments that may or may not be something that your organization would see. It just depends on what strategies you're using to invest funds, and if your organization would have an endowment, for example. So I think that's everything on this statement. Unless there are questions, feel free to drop anything in the chat.
Tracy, if we could go to gallery view just real quick, and just kind of see if there are any questions about the financial statements. We're going to take a break, but just to see if there are any questions about any of the financial statements or documents that Tracy shared with us. I do want to make a point. I know some of our nonprofits have one person that work with the nonprofit or two. And so they don't, oftentimes we don't have a depth of staff. And so this particular part of our work might be outsourced, or there's a person that does this for us. What I would encourage us, though, even in that case, whether it's a person on staff or whether you're outsourcing, keep up with how the finances are managed. And if you're fortunate to have like a leadership team, so say if you have a president, CEO, executive director, and then you have a level of what you might call your middle managers, it's important for them to understand how the finances are managed. It's building their capacity to be more helpful to you as you're trying to utilize various practices and strategies to get to where diversified revenue. So I just want to kind of point that out. Sometimes as executive directors or presidents and CEOs, we limit what we are sharing with our middle managers. But I highly encourage them understanding the essence of what it takes to manage your finances, because oftentimes they don't know that. And I think context really, really does matter. And so if they understand better the context of how dollars are managed, how grants are considered, a lot of our staff, oftentimes they've never worked in a nonprofit agency. So they don't get the whole grants thing at all. They don't understand endowments. They don't understand that a $2 million endowment doesn't mean we just got $2 million. And so I think it's important to enhance the capacity of the folks that are helping to lead and manage your work. And I see a hand, I see Randolph's hand. Go ahead.
Yes, ma'am. So my question is, so in terms of accountability across the board with a nonprofit, so can you maybe explain a little bit about like what accountability in terms of policies and procedures, in terms of like, if A happens, this is gonna happen because of that action. And I guess I need to explain a little bit. So let's say, for example, a staff person does something and it costs the agency money, right? Should there be a policy in place for, I guess, for transparency? So most smaller nonprofits like ours, I guess, when you have key employees, we don't have a whole lot of them, right? So should there be policies in place so that when folks do the auditing or whatever, they can see a direct correlation between accountability and what should happen, so that we can say something did happen as a result of that and that negative action that cost the organization money?
I think it's important to have an approval process. So if individuals are using a credit card or they have access to anything related to the finances and spending money and getting reimbursed for something, then there should be an approval form or something that gives them permission, first of all, to engage in any financial transaction related to your organization. So minimally, like, I'm just thinking like a travel approval form, so if I'm with your agency and I'm going to a conference, there should be something in place where I have to get approval for that before I begin to spend anything. So I'll leave it at that and let Tracy comment there, but minimally, there should be something in place where folks are approved before they can start spending.
And if I could,
Yeah,
sorry, go ahead.
go ahead, Lisa. No, go ahead.
Some experience in working with my former nonprofit. We used to give services to our clients, and the case managers would give them a service. We would also make sure it's in our policy that we get a signature from the client that they did receive whatever service that they were given. That way, and that's audited from time to time. And that could just be by the program officer. Remember, you just do some random checks to make sure that that person, client, thing, whatever, was delivered to where it was supposed to go, whatever it is, just as additional backup. I just wanted to add that in.
Yeah, thanks, Lisa. And actually, I was going to say something similar along those lines. When you're talking about an approval process, you also want to make sure that there is backup for those expenses, which is really key. So if there, receipts, if someone has a hotel stay, you want to have that receipt, because that's going to be your backup to that expense. And I think that's really key, whether your organization is one that has an audit or doesn't. And then I would say on the flip side of that, when you're talking about revenue that's coming in, and I realize this can be challenging for smaller nonprofits if you don't have a lot of ways to separate these duties. But even things as simple as the person who opens the mail where you might receive a payment is not the same person who makes the deposit of that payment, and is maybe not the same person who enters it in the accounting system. So anywhere where you can minimally even create some separation of duties can be really helpful as well when you're thinking about policies and procedures.
Thank you.
Are there any other questions before we go into to take a break? We know we've been at this for a while. When we get back, we're going to highlight the worksheet that's in your workbook related to budgeting. Go to the website with the agency that we used in this session. You will find that they are very transparent and report with their reports, and most everything is there for taking a look at in terms of an example. When we get back, we're going to focus on the 990 form and talk through that and what that means and what that is. And we are going to kind of close out the financial transactions part of our work. So Rebecca, I don't know how much time we want to give to the break.
Yeah, let's It's almost 11. Let's plan to come back. Would 11:05 be enough time for folks to give a little over
Okay.
5 minutes?
So a 10-minute break-ish.
Yeah, a little less,
Sort of.
but I want to make sure we have enough time to get through everything. But we'll see
All
everyone
right.
back here about 11:05.
Thank you. Well, hopefully, you had a minute to pause and, do any of those kinds of things that we all take care of when we take a break from Zoom especially. So, wow, we have really covered quite a bit already this morning related to financial management, but we do have a few more aspects of this that we want to share. What I do want to point out is in your workbook on page 102, there is a budget worksheet. And we put that there just as a reference for you, that if you wanted to go about, if you haven't started yet, some agencies are new and they're haven't been around as long, and they may not necessarily have a process in place for budgeting. So we put this here as a way to kind of guide you. One way that this could be used is, again, if you have different programs, each program could complete the budget worksheet. And then you compile those and bring those together to generate the full budget for the organization. So that's one aspect of that. Also, I did see in the chat, there was a question about, I think the finance manager versus the board treasurer and maybe what those roles are. It really varies, I would say, from nonprofit to nonprofit. Typically, the board treasurer is the liaison between the board and the executive committee, which is your slate of officers, of which the executive director, president, and CEO is a part of that. And so the treasurer does serve in a formal officer role, and oftentimes has a role during the board meetings to give a report out as it relates to the finances, but they could also be paired up with a staff person to do that. So it really does vary, but typically, you know, they represent the board, they're informing the board, and they're interfacing with the organization as needed as it relates to that. They also are a part of the audit in terms of that too. And a lot of times nonprofits will establish an audit committee when it's time for the audit, and the treasurer may actually chair that committee. So the answer to the question is that it does vary as to what role the treasurer has. And then if you have a person on staff like Tracy who is designated to actually manage those finances, then that's what they do. Is that is their responsibility there. I'm gonna move on in terms of just kind of paying attention to our time. So Tracy, I was just gonna let you go into the 990. I know that there's some folks who may have never even seen a 990 and they don't know what it is and how important it is. And so we're gonna populate that on the screen. And if you would just kind of point out some highlights here. I'm gonna say take about 3 minutes to do that, to just kind of walk through it.
Yeah, I can certainly do that. So the 990 is the nonprofit organization's tax document. And what you're looking at here is an example of the standard form 990. This first page is a summary page. This is 3-minute high level overview because there are so many different schedules that go along with this, some of which your organization may be required to fill out, some not, that are just not applicable. But a little bit about the Form 990 is this should be filed annually with the IRS, and it's due the 15th day of the 5th month after the close of the fiscal year. So what that means is if your fiscal year ends on June 30, your 990 would be due on November 15th, the 15th day of the 5th month after the close. There are different versions of the 990. Like I said, this is the standard form 990. There is a form 990 EZ, or there is a 990 postcard, and which form your organization completes depends on your gross receipts for the year. One thing we always like to mention that is a little bit of a pain point for nonprofits when it comes to the 990 is that back in 2019, there was a mandate for versions of the 990 required to be filed electronically and done so through an authorized IRS e-file provider. This can be burdensome for nonprofits and even costly if there are fees associated with that. So just something that we always like for the folks in our Nonprofit Management Institute to be aware of. 990s are required to be open to public inspection. An example of where you can find them is guidestar.org. If some of you are familiar with that, you need to provide it if it's requested by somebody. And a lot of nonprofits just have it on their website. And so it's, easily accessible to the public. But various entities will often look at your 990. It could be a donor, it could be a funder, it could be a partner, it could be an individual within your community. One thing I always like to share in a way that 990s could be really useful to that group, those groups I just mentioned, is that you can really use it to tell your organization's story and tell the accomplishments throughout the year. There is a section in here that is on program service accomplishments, where you can just really highlight the things that you all accomplished over the course of the year. We talked a little bit about the board and the treasurer role. Your board should review this prior to filing. In fact, there's even a question on here that asks if they did see it prior to filing. This is another summary that's a little bit different than your audited financial statements about the overall financial position of the organization. So you want to have your board, who has that fiduciary responsibility, reviewing that. This main form of the 990 includes various summaries of financial information throughout the year. The other thing it includes is a checklist of required schedules. There's a section on tax compliance. There's this governance section, which asks questions about the organization's board, your governing documents, your committees. There's a policy section, which asks about certain policies in place, like whistleblower and document retention and destruction, as well as compensation policies. So there is a lot to talk about for the 990, but that is really just a very quick overview. We want you to know what it is, what the requirements are to file it, and some of the different pieces that you would have to complete as part of submitting this to the IRS.
And go ahead and scroll through, scroll up, so you can see the summary section there with the expenses and revenue. There's a signature location. As Tracy mentioned, there's a place for program accomplishments. Any additional schedules that have to be added, kind of similar to your own IRS filing tax form. Very, very similar in spirit, I would say, to that. And then there is also a location where you list your board members and who your board members are. You list your highest paid staff is listed in the 9. All of this is public information. So, but here is where you see where you list your officers, your board members, you list what their roles are, et cetera. And so you're giving a report out of that as well. And like Tracy said, there are some other, depending upon the essence of your nonprofit and how it works and how it functions and so on, you may have some additional schedules that you have to add. So that is a 990. If we could go back to gallery, how many of you, this is your first time ever seeing a 990 form? Just give me some kind of, you can use your reaction button, or this is your first time. I've never seen a 990, didn't know what it was, didn't know the purpose of it, and so on and so forth. Okay, So some of us are, have been at this a little less time than others. And so, but the 990 is filed every year, as is two other aspects of financial documentation development. The annual report, so every nonprofit should do an annual report every year, and we should do and engage in an audit every year. It is not uncommon for us to interface with nonprofits who have been around for a while and never completed an audit for whatever reason. But we highly encourage that you engage in that. It does cost money to go through an audit. And so, but it is a very important practice. I do know there are some nonprofits, as they're trying to scale up, right, how they manage their finances, and they may have not engaged in an audit, they will have a review, right, of how they do their accounting and financial management, which is better than not having any kind of accountability at all each year. So Tracy, I don't know if you want to speak to the annual report or if you want to speak to audit. And then lastly, if you could speak to GAAP, just so that folks know what GAAP is. And they have a link for GAAP in their material.
Yeah, I think just really quickly about your annual report, you'll see a lot of those posted on the website for the organization so the general public can see it. It's another way to tell your story and highlight your accomplishments. You can thank your donors and partners through your annual report. It can have both programmatic data and information as well as financial. And you'll want to think strategically about how you share that for your organization. Yeah, Dr. Palmer mentioned a financial review. Like she said, that's better than not having anything done. A financial review can test some of those internal controls that we talked about before the break. Also looking at your bylaws, and it can, look at things. It can test certain things like that to make sure that if you're saying that is your policy and procedure, that it's actually happening, which makes funders and the public have some confidence in the way that you're managing those finances. And then really quickly, GAAP is just generally accepted accounting principles. It's a common set of accounting rules and requirements, which is issued by FASB or the Financial Accounting Standard Board. And the purpose is just to standardize procedures used in accounting. They want to help provide some clear, consistent, and comparable information on financials across nonprofit organizations. And they're required by us to follow to ensure that our financial information is being reported consistently and accurately. Yeah, I think that's anything else, Dr. Palmer, that you want to add?
I think that is it. And there is a question about any recommendations for small nonprofits. I'm thinking, Rebecca, we could share, some of those in the wraparound, some of those accounting firms or groups that we have somewhat of a list.
Yeah, folks can always go to our business finder on our website. I'll put the link in the chat here for that. You can search for the vendor or consultant that you're looking for. It gives a brief description and contact information for them. And I understand it is a challenge. So it's nice to know that these organizations have, are part of our directory. They're used by they're familiar with nonprofits. They're used by lots of nonprofits. So I'll put that link in the chat for everybody.
Thank you. And if we could pull up slide, I think it's 19 or 20, it has a list of the internal controls and audit points that Tracy was referring to, just so folks can kind of see that. So we started with our topic on financial management, 3 parts. 1, financial transactions, and thank you, Tracy, for walking us through that. And then the second part was internal controls and audit, and that's what Tracy was referring to a moment ago, that you know, there should be some internal controls that we've developed ourselves for our agency. If we are not at a place of doing a full audit, a financial review is a task that we can take on to show accountability for how we manage our finances. We can reference our bylaws for a little insight as to what at least the founders of the organization thought about as it relates to finances. And then, of course, there's the audit in terms of that, and that is completed by an external firm as it relates to that, with there being a cost associated with that. So if we could go to the next slide, and then I'm going to come back to gallery just to kind of see if there are any additional thoughts or questions. So this is where we started this work this morning as it relates to financial management. We started by looking at this visual and to give us a view of what it is we mean when we say we are trying to or want to diversify revenue. There are strategies that we can utilize to diversify our revenue stream. We can definitely look to engage in revenue generating initiatives in terms of that. How do we get there? It is a multifaceted approach to getting to a diversification of revenue, and it takes time. It doesn't happen overnight. Hi, Karen. I see your friend there, Karen. But at any rate, so a diversification of revenue comes. Look at what we have at the top. We are nonprofits, and so there is something we can do called fundraising that our business counterparts in the business sector don't typically engage in. And then, of course, we can offer fee for services. There may be services or programs that we have available that we can offer a fee for. And then, of course, there's grants. And then, of course, there's contracts. Grants and contracts are different. Oftentimes, the working relationship is different with the nonprofit. What I see mostly is contracts with government. So when our government entities like DSS and public health and et cetera, when they are looking for an entity to help them deliver services, oftentimes they'll set up a working contract with a nonprofit. Nonprofits can have investments. A nonprofit can have an investment portfolio, and then endowments are another area in which nonprofits can grow its revenue. And so as we kind of move into our work on fundraising, it is important for us to understand how these two intersect or should intersect. Here's a thought that we pretty much share most of the time when we're talking about fundraising and when we're talking about diversifying our revenue, is that we don't want more than a third of our revenue coming from a single source. We don't want more than a third of our revenue coming from a single source. And that helps us from a risk perspective, that if one of those opportunities goes away, it wouldn't necessarily leave your agency in a position of not actually being able to function. And so we want to work to diversify where our revenues are coming from. And we highly suggest that we focus on individual unrestricted donations. If we can secure unrestricted individual donations at a very high level to scale as it relates to our nonprofit, then that we will be moving in a really, really good direction there. When you look at this pie chart, notice we have United Way here, and we have private foundations, and we have corporate. Those are probably grants, right? So if you add that percentage together, that percentage of grants goes up. Government could be a combination of grants and contracts there. And then, of course, programs looks like there is a charging for some services or some programs there that they're charging for. So that is in essence, you know, again, just kind of taking a look at these financials for this organization. And this information is on their website. So it's available to kind of look at as a possible example. I am gonna take us back to gallery, if you don't mind, before we go into our fundraising topic. Whew. That was quite a bit as it relates to that. Tell me what you're thinking. What are your thoughts?
This is Melissa from the Clean Energy Fund. I'm wondering, in the idea of diversifying revenue and not having more than a third of a particular source be a third of the revenue be from any particular source, does that mean a third being grants generally, or a third being a particular foundation or philanthropy?
It could be from a formula perspective. It depends on what your formula is. It could be both, right? That you don't want more than a third coming from one source, meaning one source overall, or you don't want more than a third coming from a particular area like grants versus fundraising versus endowments versus the other. And again, this is why it's important for fundraising, right, and financial management to work together. Because it may be that on the finance side, we're wanting, I think we had 7 or 8 different funding sources in our list. You know, on the financial management side, the finance folks might be saying, you know, well, we want 100% from fundraising. That would be great, right? Unrestricted. But on the fundraising side, they're saying, no, but we have a reputation of being able to secure 10 grants from whatever sources, and that really does meet our need. And so it's important for those two to talk, Melissa, so that you can create that formula, whatever that formula is that you all decide. Any other questions before we move into fundraising? Okay. Well, all right. Thank you, Tracy. We appreciate you, and thank you for joining us. And we're going to move into our next topic. Everybody ready? Because we're rocking and rolling here. One of the things that we really want to have some hands-on time with is prospecting. And so I'm going to move us through our initial information, and I want to get us to doing a prospecting exercise. Because we know when it comes to fundraising, that is really the goal. You know, we want to reach as many and acquire as many individual donors as possible. That's what we want to do. There are pitfalls that we find ourselves in sometimes when it comes to fundraising. I'm referencing your workbook. Again, I'm looking to my left because my workbook is to my left today. If you look at page 106, 107, and 108. One of the things about fundraising that I'll just say at the top of this is it takes time, and it also takes a strategy. And so we should build whatever that strategy is or that master plan is, and we should work that strategy. Over time, we start to see the results. So for example, if your nonprofit identifies what we call like a premier event that you do every year, same time to raise money, over time it grows. You know, the first time you may or may not meet your goal. Second time, you may or may not meet your goal, but you're working at this each and every year. And we should be working on fundraising every day. So it's not seasonal. even if we have our annual event, let's say it's every November, December, January, whatever the time frame is, we should be working on fundraising every day. There should be some aspect, CEOs and executive directors, that's something that you're doing each and every day related to fundraising. Because that's really where we want to get as many of those individual donors as we can possibly get. And so we want to make sure we do that. So we've listed here in these 3 pages some pitfalls that folks sometimes find themselves in as it relates to that. Don't give up. Keep working your strategy. And over time, it gets better and better and better, and you're able to yield revenues that you see. The organizations that you observe who have an annual event every year, and they're raising $250,000 or $500,000, those events have been going on for a significant amount of time, and you have to kind of get there. So don't give up before your strategy has time to work for you. Team, if we could go to slide 25. I want us to move into prospecting. So, but I want to highlight kind of the stages of fundraising. Okay. So, regardless of what resource you use to educate yourself on fundraising, typically it occurs in these stages. So we work through identification, cultivation, solicitation, and stewardship. And this is all about asking for donations. So we identify who we're going to ask, we cultivate the relationship, we make the ask, and then we get the gift and we steward the gift. That's the 1, 2, 3, 4 step kind of framework for it. And then you build out these pieces related to how your organization is going to go about engaging in these different areas. And so one of the things that we want to do is we want to walk us through an exercise where we do prospecting, where we engage in prospecting. And so go with me in your book, your workbook, and everybody kind of be with me now because I'm going to take you through several steps. So if you're multitasking, I'm going to request your attention because we're going to walk through these steps and in terms of just kind of generating a list of prospects. And when we go through this process, oftentimes I'll get the question of, what, really, is this it? Yeah, it is identifying who you're going to ask, deciding how you're going to ask them for a gift, and then asking for the gift. So if we have some fear in asking for donations and asking folks to give, then that's some work we've got to do before we can really kind of exercise this particular practice that we want us to kind of work through. So if we could go back to the gallery, and if the group could go to page 111 and 112. We're going to go into breakouts, okay? So I want you in a minute. So I want you to just kind of walk with me here. So we're going to generate a master donor prospect list. That's what we're going to do. And we're one organization in this exercise, one big nonprofit. And so the first thing that I want us to do is I want us to, on page 111, I want you to actually use this worksheet. Individually, I want you to write 15 people's names that you know, just that you know. $15 people that you know. On any level. They know you, you know them. That you know. They may know you a little bit, but you know them.
Dr. Palmer, you want them to do this now, right?
Yes, we're doing it now. Mm-hmm. Everybody should be on person number 8. I'm walking you through this swiftly. Because what we want is to kind of craft the approach that we're suggesting. All right, everybody on number 10? You got 10 people for me? Okay. 13. And this is an exercise you can do with your board, and you can also do this with your staff. Okay. The next column, all you're going to do is put a check mark, right? In this column, you're going to check out of those 15 people, you're going to put a check mark in those of the 15 that know the mission of your organization, believe in your cause, have some sense of what your organization does. You're just going to put a check mark. So you got 15. You're just going to put a check mark in that column for me. This is called prospect identification. Once you go through that list of 15 people, you know, out of those 15, who believes in your mission, your cause, your vision for your agency, how many of them that you are aware of that give money away for any reason? They give money to their church, they give money to their sorority, they give money to their alma mater. Of the ones who believe in your cause, how many of them already give money away to in some form? So you're going to check those. And of those that already give money away, your best guess, how much do you think you could ask them for to give to your organization? How much? So here are the steps. 15 people that you know. Check off the ones that believe in your cause, your mission, your vision, or appreciate it, or understand it, or like it, or have shown you some indication that they get it, right? The second column. Third column, how many of those that you checked, how many of them already give away money in some form? And of the ones that already give away money, right? How many, what amount would you ask them for? What amount would you ask them for? From the fourth column, the amount that you would ask them for, put in the chat, how many people is that, right? So you're looking at the fourth column. How many dollar amounts do you have? Not the total dollar amount, but how many people is that? And then just put in the chat. I see 5 people. I see 4 people. I see 3 people. I see 11 people. I see 7 people. I see 15 people. Yay. I see 5. Okay. The folks that you have listed in that fourth column, turn the page in your workbook to 112. Turn the page in your workbook to 112. You're going to list those names on page 112 in the first column. So you should be in the fourth column, right? You've indicated how much those 5, 7, 15 people that you put in the chat. Now you're just transferring the names of the people you would ask for money. Yes. and you're putting their names there. So if you had 15, you have a total of 15 there. And go ahead and just in the little corner, put the amount, just to kind of, so you don't have to keep flipping back and forth. Just go ahead and put the amount you would ask them for. Okay? We all good? Yes. Stacy, are you saying something to us? Oh, okay, good. I saw you talking, but you were leaning in, so I thought maybe you were saying something to us. Okay. So we're gonna finish out this master prospect list and we're gonna put you in breakouts. And what you're gonna do in your breakout is you're gonna share, you're gonna add to your list the names of the people that your peers have on their list in the breakout. So you're gonna go in the breakout. If there are 3 of you, you're gonna have your names and you're gonna have their names. And you don't have to give like full names or whatever. You can just use first names and all that. So if I'm in a group and I have 15 names on page 112, and one of the people in my group have 5, I now have 20. Another group another person in the group has 2, I now have 22. So what you're gonna do is compile your list, right? You're going into breakout. Rebecca, I'm gonna pass it over to you.
Okay. We'll put you into your breakout groups. I think probably only need about 5 minutes to do this,
Yeah,
right?
I think so.
And I'll put the notes in the chat. I'll generate that in the breakout groups chat so you all understand what you're supposed to do. Basically, you're compiling all your names into one full list, correct? And you're
Yes.
going to tally up how much that total amount is for your group, correct? Okay. So let's go ahead and pop you guys in there. Give you 5 minutes in there. There we go. And we'll see you back here in 5.
Rebecca, I'm gonna pass it over to you. So what we want you to do is to tally the total number of prospects. So for your group, have that ready, and then the total amount of the ask across all of those, adding all of those amounts for each prospect. So, and then we're going to populate that here on the screen for us to kind of just analyze and talk about. So take it away, Rebecca.
Sure. So one of you from group 1, if you'll tell me the number of prospects you had and the goal amount that you have for your fundraising you think you can get from those prospects.
And Rebecca, is that the first prospect list or the master? Because we did both. We did
Master.
the master. Okay.
Master.
Out of 26, we have a total of 223,000.
And you said 223,000?
Mm-hmm.
Okay. All right. How about group 2? Thanks, Kate.
For group 2, we had, I think, a total of 31 people, but we did not have a grand total amount of dollars.
Okay.
So is it 0?
No, I think we just didn't realize we needed to tally our amounts there.
Oh,
We
okay.
can add them up real quick. I had
Mhm.
775.
How much?
775 for me.
775,000.
Oh, you're on mute, Randolph.
Randolph, was that 775,000 for the group or just individually?
That was just me, $775.
Got it?
Oh, okay. So for now, if group 2, if if someone, I don't know if you could do that, otherwise we'll put what Randolph added in there. And we'll go on to group 3. We'll come back to group 2.
Okay.
Group 3, we had 39 prospects
Okay.
and $38,500.
All right. Group 4.
I don't know if we were group 4, but we had a total of 51 in our group, and we didn't get to a dollar amount either, but let's put in 175.
Okay.
Thank you.
Thank you. And then our last group.
Group 5, we had 30 and 22,000.
Okay. Right. And then group 2, do we have consensus on a total
I think
amount?
I saw 13,625 plus the 775. I'm doing some quick math here.
Okay.
24,400 is what I could gather from the chat and all.
Okay.
So as an organization, if we were doing this exercise as an organization, we have 177 prospects, and those 177 could yield us almost $500,000. You know me, I'm gonna round it up, right? So here's the thing that's important as it relates to fundraising. If we don't do fundraising doesn't happen, right? If we don't ask for donations, we don't receive donations. And so oftentimes we are more apt to write a grant than we are to actually ask for a gift. That's just kind of the culture of our nonprofit sector. What we want to grow in is we want to grow in asking for the individual donation and coming up with a fundraising program, a fundraising schedule, a fundraising apparatus to help us to be able to go out and communicate with these 177 prospects. If you recall in the exercise, if you go back to page 112, we ask that you list name of 15 people that you know. And then we ask for you to identify whether or not they believe in your cause and all that. And then we ask you to identify whether or not they give money. And then of those that give money, we ask you to come up with an amount that you would ask them for. That was pretty much the exercise. So that's one group of prospects. And those are the prospects that we're looking at right now. But there are also prospects that we didn't factor into this number. And those were the ones who don't give money, right? That we know of. So there's a whole nother group now of prospects. You got a group that you know give money, so you're gonna ask them to give money to your cause. But there's also that group that you don't know that they give money, and we could have a strategy for them. So we're not leaving them out. You have a strategy for the folks that you've got a sense that they give money and believe in you, but you also have a group that may believe in you, but you don't necessarily know if they give. So you would have 2 different messages, 2 different ways of approaching those prospects, but you could definitely make an ask of them as well. It would just be packaged a little differently. And this can be done annually, especially with your board. Another part of this, when you generated your list of folks and you came together, oftentimes what happens is you might know the same people, right? So you might find that your peer that's working in the group around prospecting, you know some of the same people. So isn't that lovely? Because then you can have kind of a joint approach as to how you might ask. So once you have this in front of you, you can begin to kind of think about, well, how do I approach this group versus not? How many folks is this? Who should I involve? And so on and so forth. But this is the identification part of what it is we do as it relates to fundraising. And then we begin to work our strategy. If we could go back, team, to the slide. So this is identification. Go back to slide 26, I believe is where we are. So in the identification part of this process, it's donor prospects and then doing the research, right? You can go to the next slide. And then there is the cultivating. We're going to cultivate this group of individuals. In your workbook on page 113 and 114, we have just some tips for you in terms of some people rules of fundraising and what we call the donor bill of rights. And we can even provide the link to the donor bill of rights. You will find that the donor bill of rights, I mean, if you Googled it, it popped right up. But these are the rights of the donor. So whenever we solicit these individual gifts that we're trying to receive, and we go from prospects to new donors, there are some bill of rights that we identify and we need to be mindful of in terms of donors and their expectations and how we align with our donors. We might also have existing donors that we need to cultivate, right? Or recultivate. Establishing a donor base is what prospecting helps us to be able to do. And we can keep that in a database. I'm gonna share with you some different donor databases, database management systems that you can use. And we'll include these in the wraparound as well. But get your pen ready. I'm gonna share some examples of some of these platforms. There's what we call Salesforce. That's one word, Salesforce, just like it sounds. Then there's Bloomerang, Bloomerang. And then there's a platform called Salsa. And then there's another platform called Network for Good. Now, there's some others out there that help you to record your prospects and contacts and manage the data related to your donors. So those examples were Salesforce, Bloomerang, Salsa, and Network for Good. So these are donor base, establishing a donor base, and then database platforms. Now, most of these have a fee, so they're not 100% free. So you might want to think about that. And I've known nonprofits to start with Microsoft Excel, you know, to just get it started. And a lot of these platforms interface real well with Microsoft Excel. Once we have a donor base, and once we have this system set up, there's a note in the chat about Salsa team that Salsa is ending at the end of the year. Thank you for that update. But in terms of once you have this information, then you can analyze your donor giving. And if you've been around for a while, you can look at how long folks have given, how much they've given. We call that frequency and consistency. So how consistent are they in how much they give, and then how frequent do they do it? That is very, very important. But those are a couple of handouts that we have in your workbook. So page 113, 114, and 115. Can we pull up the donor bill of rights just on the screen real quick, just to show the group? So people rules of fundraising and donor bill of rights is those are two handouts that we have for you. We want to try to build a donor base, and then we manage that donor base in a database. And we have to decide on what platforms we want to use for that. So the donor bill of rights looks like this. And I just want to kind of highlight what we have here. And most any fundraising workshop or training that you attend, this typically comes up, just like the pyramid, the fundraising pyramid comes up, but this typically comes up. The long and short of it is that there is this sense of accountability to our donors. And sometimes some donors want to give their gift and they don't want to be bothered anymore, right? But then there are some donors that ask for information. They might want to visit your organization. They have access to your financial statements, as Tracy shared with us. Your 990 is public. Once you post your information on your website, that information is public. But the 990 captures all that information anyway. So that is public. If you could move the document up some. Sometimes donors want to, they don't want like their names on a mailing list. They don't want you sharing their names, which makes sense. They want to make sure that their gift is going to be used for the purpose that it was given. So that's very important to keep in mind. Some of them want acknowledgement and recognition. Some of them don't. Some of them expect all of the relationships with the individuals that represent the organization. They want them to be, we want to make sure that those are very professional relationships and appropriate relationships. So that's important. But we just want to kind of keep in mind that as a donor, these are some things that we should have top of mind as we try to identify and cultivate and solicit donations from them. If we could go to, there's a question in the chat team, but if we could go to slide 28, I believe, solicitation. Thank you.
You want now, Dr. Palmer, or later?
Say again.
Do you want this question now or later?
Now is okay.
Any tips for soliciting vendors we contract with or ones we utilize their services?
Are you talking about soliciting them to give a donation?
Yes, so we have people like we buy insurance from, we contract to do like our copying. We make, they do a lot of stuff for it that we pay them to do. Is it okay to then go back and ask them, oh, would you like to donate to our nonprofits? So sort of thing.
Yes, it is. So they could be a prospect.
Okay.
I would probably hone in on a person, the person, a person that might advocate for, giving to your organization, as opposed to just sending a blind communication. Maybe it's the sales rep that you interact with, you might kind of test the water and ask them, do they give? If so, how? That could be a little bit of research you could do just kind of in real time. Yeah, so you can certainly do that. So it's making the ask, and then once we've asked for the gift, it's managing the relationship, keeping the relationship and making sure that the rapport continues. Again, it is important to spend time learning your donors and learning them in terms of what they prefer and how they prefer to interact with your organization or not. Sometimes they, they don't necessarily want to do that, but it is important to make the ask. I was watching CBS Mornings this morning, and there's a segment on that show where they talk about, it's called Talk of the Table. And one of the hosts shared, I can't remember the gentleman's name, but he made billions of dollars. It's like a military equipment supply, some kind of company like that. And he made billions of dollars. And the highlight this morning is that he gave all of his money away before he passed away recently. And he gave billions, gave it all away. He decided, I don't know, like 2 decades ago, that he was going to give all the money away. And he did, and he gave $7 billion, I did say billion. He gave $7 billion to Cornell University. That was his alma mater. And then he gave the money away up until his passing. He even changed his lifestyle such that he could just give it all away. So real interesting story of, and didn't want any recognition, anonymous, any of that. And the story came out and this person was sharing it. I say that to say there are people who give, who just want to give, and they just don't want to do anything else related to what it is that we do. And I think it's important to respect that and to learn your donors so that you know who they are and how they and how they want to interact with your agency. So that's important. If we could go to, I want to try to do one more thing before we end here. Go ahead and go to stewardship. So solicitation and then stewardship. So once we have solicited the gift and we've received it, now we might engage in donor recognition, or we, if the donor wants that, sending out thank yous, showing appreciation for the gift, and interacting with the donor that way. You can find a handout about thank you and appreciation on page 117. In terms of that. So that's identification, cultivation, solicitation, and stewardship. How we communicate with our donors is important as well. You could go on to the next slide. Once we have established a donor, how are we gonna advertise and market to that donor? There are traditional methods that we've used over the years, newsletters and e-blast news and so on. And then we have social media. We can look and do research on our donors. Do they have an Instagram account? Do they have Facebook? Do they have, what platforms are they using? Can we find them? And then we can communicate that way. And then, of course, in terms of keeping everybody informed about what it is that we do. Sometimes we are, needing to communicate with our grantors, sometimes with volunteers, our board members, the community at large. We're all prospects until we give, right? And then once we give, we're now a donor. So that's important to kind of keep in mind. And asking is key to that. Go with me in your workbook. Take me back to gallery view, team. Go with me in your workbook. So there is a part of fundraising that is throughout any training or information that we review or study related to fundraising, and it is the pyramid of giving. That is a very, that imagery is something that we see throughout the fundraising literature and information. Together in this space, I want us to do what we call a scavenger hunt, okay? And I want you to use pages 120 through 123, okay? 120 through 123. So if you look at page 120, you're going to see pyramid of giving. If you look at page 121, you're going to see types of giving. And if you look at page 122, you're going to see an explanation of types of giving or types of fundraising, okay? Again, if you look at, we're going to do what we call a scavenger hunt, and you're going to use pages 120, pyramid of giving, and you're going to use page 121, types of giving, and you're gonna use page 122, which is a further explanation and examples of the way in which we fundraise related to the giving, right? So we have 3 different types of giving, page 121, and we have, of the 3 types of giving, we have types of fundraising listed underneath each one, okay? We're gonna do a scavenger hunt. So go back to page 119. Here's the scavenger hunt. You're gonna utilize those pages to fill in this information. Identify the number of giving programs. You're gonna use those pages to identify that. What are the giving programs? You're gonna use those pages to name those. Match these 3 donor types. The 3 donor types are habitual, impulse, and thoughtful. You're gonna match those donor types with a giving program. And then what does this pyramid symbolize to you? Okay, so you got 1, 2, 3, 4 really questions to answer. So I'm just gonna go silent for a couple of minutes and let you use those pages to answer these questions. And you're gonna answer the best you can. I'm gonna give you about 1 more minute. Okay, let's spend a little bit more time with these handouts. Identify the number of giving programs. Put the number of giving programs in the chat. How many do we have? We have, yes, we have 3. So if we look at page 121, our 3 giving programs are annual giving, major giving, and estate giving. Annual giving typically aligns with the budget, right? So in terms of what we have in the budget for our fundraising goal for the year. Oftentimes there's a revenue line item for that, and it was in the information that Tracy shared with us. And so the annual giving program, we're looking for annual or recurring gift from folks, from our constituents. And we typically have a period in which we are soliciting the annual gift. And so we're going back to our donor base. We're asking people that have already given, et cetera, et cetera, et cetera. And then the major giving is once we've been around for a while, we might be ready to do what we call a major gifts program. And this, I think a really good example of this is the Tocqueville donor with United Way. The Tocqueville donor is typically gives at 10,000 or more. And they're considered kind of a major donor for every year. And so oftentimes we'll have what we call those major giving programs as a part of our strategy. So they could very well give annually, but they're annually giving a major gift. Or we could just have an outright separate major giving program. And then estate giving is when an individual decides that they're going to leave us a gift upon their passing, or they're giving a very, very large gift, while they're living, but they're giving that gift over time, and it's a part of their estate. So there may be something of value that they have that's generating revenue, or there's a residual, and they want to give that to a particular cause. So those are our primary giving programs. Now we're going to list the donor type. So the donor type, the first one is habitual, the second one is impulse, and the third one is thoughtful. Which of the major programs, and put it in the chat for me, which of those 3 major programs do you think aligns with a habitual donor? Meaning that donor gives consistently and recurring, so they have a habit of giving over time. Which one of the donor types do you think that type of donor aligns with? Yes, major, exactly. What about the impulse donor? Which one do you think is more apt to be that donor type for the or the impulse donor? Which of the programs do you think aligns? Annual. So if we're wanting someone to give for the first time, often when they give for the first time, we consider them the impulse donor because they've not given before. They may not be, if I'm an impulse donor and this is my first time, my estate, I might not be leaving anything in my estate, maybe not. And so it's more likely that that would be annual. And then of course, the last one, thoughtful donor, would align with the estate giving. Last item on our scavenger hunt. What does the pyramid symbolize? And you can put that in the chat as well. What does the pyramid, or you can unmute. What does the pyramid symbolize? And we can also turn to page 120 if we'd like, because I want to reference that page. Pyramid of giving represents number of donors. I see various kind of comments there in the chat. Building process. If you look at page 120, here's the imagery. Here's the takeaway. If we have a real solid annual giving program, then we're more apt to yield and we're more apt to engage in a successful major giving program or a state giving program. So the idea is to build the foundation, and the annual giving is the foundation, and then we build from there. So in terms of the pyramid, that is that. And then I see a comment, the base is made up of the larger amount of individuals, scales to lower number of individuals. A state will have least number of people donating, but could be largest amount. So, and you will see the pyramid of giving that is seen throughout the literature related to fundraising. Team, if I could go to slide 32. I just have a couple of more things I want to share with the group, and then I will turn it over to you all to close us out. So we talked about diversifying revenue, and we talked about financial management, and we talked about fundraising. Outside of fundraising, we do what we call fund development, and that could be in the form of grant writing. It could be in the form of earned revenue, meaning there's something that we can sell and we can generate revenue from it, like renting a space or paying for aerobics class, like at a YMCA. We buy memberships. So there are different ways that we can do fund development. Social entrepreneurship is a way in which we engage in addressing an issue in our society or our community. And business owners do this quite a bit. But then there is some earned dollars that we can get from that. I'll bring some examples when we get together next week for that particular one. But social entrepreneurship, earned revenue, and grant writing. Those are all fund development strategies. In your workbook on page 124, we have some characteristics of a successful fundraiser that you can also kind of speak to. Last point I want to make, it takes people to do fundraising. It takes people to do fundraising. It takes people to manage grants. It takes someone to find grants. It takes a person typically to write the grants. So if we're going to engage in fund development, there is a need for personnel, whether it's volunteers or whether it's paid staff. We can go to the next slide. So it may be paid staff, it may be volunteers, it might be our board, but it also might be consultants. So again, it's very important for us to keep this in mind, because oftentimes our board of directors want us to do, say, a special event or a premier event, or they want us to, to do some type of fundraising activity or event. Well, we have to have people to do that. And so I think it's important for us to not lose sight of that as we're trying to do fundraising. And not all of our organizations have the capacity to do that. So while it's ideal that we engage in fundraising and we secure individual donations, it's important for us to recognize that we have to do, or we may have to do, fundraising to scale. And that is to scale as it relates to our capacity to do so. So we want to definitely keep that in mind. If we could go to the gallery view for a moment. Financial management and fundraising. That's where we've spent our time today. Give me a sense of kind of where you are with these two topics, recognizing that these two management functions should be managed parallel. Like there should be some alignment with what we're doing on the fundraising and fund development side of the organization with what we're doing on the financial management side. Where are we? Right now you're thinking what? And you can unmute or you can use the chat. Too much to cover in one session. Amen to that. Actually, all of our sessions could be a full day. Every single one could be a full day. Absolutely. Baby steps, baby steps. It's a marathon, not a sprint, right? Baby steps to get us to where we want and need to be. Anybody want to share their voice and unmute? Or if not, I'm going to pass it back over to the team. We're getting some positivity there, some affirmation of what folks are doing in their organization in alignment with what we're sharing. So I think we're going to go to the grateful we have a CPA on staff, LOL. Thank you for sharing. Rebecca, I'm going to pass it over to you. I know you want to go to the last slide in the deck here.
Yeah.
You all have a good week.
Thanks, Dr. Palmer. Thanks, everybody. Some quick notes before we close. Next week is our final session. We'll be covering human resources and graduation. And there's a couple of things that we want to just mention to you before we close today. And these will also be reiterated in the wraparound email. But we'll be sending out an invitation to you. It'll come by email from this platform called Montage. And it allows you all to submit a quick 30-second video. It's not required, it's not mandatory, it's all optional. If you'd like to, there's some prompts that they give you, and you can record a short video that gets compiled into what they call a montage video. We show it at graduation. It's a chance for you all to kind of answer to any of those prompts that you feel like talking about the impact of the Institute, messages you might want to give to your fellow cohort members, all those sorts of things. So it's intended to be a feel-good thing. It's something that we do post on our YouTube page. For folks that are interested or curious about the Institute, they can always go and kind of see what those impacts are and hear directly from participants. But it's just a nice way for us to get a chance to hear from all of you in an organized way during graduation, because we know that we are short on time often. So it's a way for you all to participate in graduation if you choose to do so, but no pressure. You'll get that email. It'll come to you from Montage. It'll be an invitation. If you don't see it, check your spam, your junk. If you still don't see it, let me know. And we'll get that to you, and we'll compile those. I think the deadline is Monday by noon. So we have a little time to put them all together and consolidate them into one graduation video. We'll have a link in the wraparound for some graduation themed Zoom backgrounds. This is also optional. You download a background, you upload it to your Zoom platform, and then once we hit graduation at the end of next week's session, you're able to have a celebratory themed background. If you're curious to do that, there'll be instructions in the wraparound about how to change your background. Some of you have backgrounds, so you'll see how to do that in that email and how to download, choose which one you'd like to use. I want to make sure that all your mailing addresses are up to date, because we'll be sending you your certificate and your class photos by the mail, by postal. And so if your address has changed at next week's session, I'll just ask you to let me know if you have an updated address, or you have an address you want to confirm where your certificate will go. As long as you receive that workbook, that's the same mailing address we're going to send your certificate to. So if you're good there, then you're good, and no worries about that. And then we'll also be sharing information about how to apply for those Duke Nonprofit Management Certificate credits as well in next week's session, if you're interested in applying for that and having those go towards your Duke Nonprofit Management certification. So more details to come on that. And then we'll go to the next slide. You'll see our final session. And the final screen, I'm going to put the evaluation here. Oops, that's not the right, there we go, the right link. Copy link. I might ask Leslie to pop that in there for our evaluation, because my copy is not working for some reason. But we do have some listed in the slide deck and also in the resources in our extranet, you'll find our member benefits that are aligned with these two topic areas. So if you are a member, it's a great way to link up to those and to get further information. You can also go to our website and go to the free resources tab if you're not a member. We have some really good resources for our financial management that we provide for free, as well as for fundraising. That's another great resource I want to mention to you as well. And thank you, Leslie. She popped that in there for us. If you have a couple minutes before your next obligation, or you want to do it while you're grabbing some lunch, there's your session evaluation. We appreciate your feedback, and keep an eye out for that wraparound email. There'll be lots of goodies in there for you. Thanks for joining us, and thanks to Tracy for being with us today as our special guest. We hope you all have a good rest of your week. Thank you. Thank you. Good to see you. We'll see you next week.